This theme of angry societies has been a brewing problem created by many different factors. The growing gap between the rich and the poor in many countries. You've got issues around immigration and so on. And it's creating angry people that's changing the political landscape around the world. It's creating a political landscape that's now directing policies towards nationalism, populism, things that were unthinkable. The rejection of multilateralism, for example. I mean, you have trade issues. You've got the U.S. getting out of trade agreements that it in the past had led. So it's really a new world that we're faced with.
Indeed, yeah. And your panel, I understand, also very quickly morphed the conversation to U.S. versus China as well.
Well, one of the biggest super trends is really the emergence of China as a superpower, as a super economic power. And I think the rest of the world is still learning to live with that, particularly the West, which has dominated world economy for the last 200 years. And I think that came out very clearly in the panel session that I moderated.
So tell me, 80% of your clients, the bank's clients, are self-made men. They're entrepreneurs, right? And there's so much going on in the world. This tide of populism, populist politics. You've got the U.S.-China trade war still going on, right? You've got Brexit brewing as well. What are the things that they're most worried about as they try and do their business?
Well, if you consider when we were entering 2019, what were some of the biggest concerns? I think the potential of a recession in the U.S. because of the inverse yield curve. You've had the potential of rising interest rates, not only in the U.S., but really around the world. And then you've got the trade war between the U.S. and China, which was beginning to disrupt the production cycle around the world, right? And then certainly being of concern to Asia. I think as we enter towards the end of the first quarter, you see some of this risk being abated. For example, interest rates, I think there's now a general consensus that U.S. interest rates will continue to be quite benign, and you would expect low interest rate environment to continue. And that, of course, is positive news for the rest of the world, the rest of emerging markets, for example, where we might have seen rising interest rates, depressing growth in the economy. That's not the case anymore. I think another concern is really continuous or sustainability of growth in China, because Chinese economy has been slowing, from the highs of the 10-11% decade ago, to 6.5, 6.9%. And this year, I think many economists were expecting Chinese economy to decline or slow down even further, maybe to 6.2% for the year. I think that is also changing. You've seen the Chinese government respond with some stimulant measures. You've had a reduction in taxes. You've had relaxation in credit, although they need to continue focusing on credit allocation, because that was certainly a problem in the earlier stimulus program that they had back in 2008. So some of the concerns that we were seeing in towards the end of the year, beginning of this year, I think are beginning to be reduced, and so you're beginning to see again a sense of cautious optimism.
Okay.
I think our own economists have upgraded our forecast for the Chinese GDP growth to 6.3%, up from 6.2%. And I think, and we now have a rather positive call on equities, particularly in emerging markets.